Hello everyone. So welcome to the third video in the playlist on this concept of cash reconciliation. So in the first video already we have seen this diagram and we have discussed what is this diagram and how to match the cash balance from the bank statement side and as per the books. And in the second video we solved one problem. So the problem is like this: cash reconciliation, this problem. So you can just quickly have a look at the problem, and finally we have solved the problem and got the proper adjusted cash balance. In both cases it is matching. Now one thing was pending, that is preparing adjusting journal entries necessary to determine the adjusted cash balance per books. Okay, so let us try to work out this particular journal entries. Okay, so now journal entries, if you see in my channel, I have made a separate playlist with the title of accounting cycle. So you can go to my YouTube channel and search for the playlist with the title accounting cycle. In that there are several videos where I have explained how to make the journal entries. Now in this case it's a special case. We are making journal entries for correcting this particular reconciliation process. Okay, so first of all, what are the journal entries are made on the company side, so we don't worry about the bank side. Let's worry about the company side. Okay, so what are the four kinds of adjustments mentioned here? So we have four kinds: 1, 2, 3, 4. So first one is notes collected by the bank. Second one is NSF or bounce check. Third one is printing charges or other bank charges, and last one is any errors, if you make any errors in the company. So for four cases there are four sample entries. Okay, so again from the textbook I have taken this particular sample adjustment entries from the one of the pages in the textbook. So the four entries are here. So one by one I will explain each entry. Okay, so look at the first entry. What is this? Collection of note receivable. Okay, so here if you see this one, notes collected by the bank. Okay, so when a bank collects some money from your customers, the bank will inform to the company that hey, your notes have been collected and I have updated the bank account balance. At your end you also update your cash account. Okay, so that is the message. So that is why you see collection of note receivable. So cash has been increased. Okay, so by 1035, and expenses have been increased by 15. So actually cash received was 1050, but then some expenses are also there, so expenses debited. Meanwhile on the credit side, notes receivable will be credited by 1000 and interest revenue will be credited by 50. So why the entry involves four accounts, assuming that the interest of $50 has not been recorded and the collection fee is charged to the miscellaneous expense, the entry is. Okay, so miscellaneous expenses will be there, that we have to keep as on the debit side. Cash you have to keep on the debit side, and other two you have to keep on the credit side. See, even though you did not understand this completely, don't worry, just follow this template. So this is like a template where, and it is meaningful also. See, cash will obviously increase because you are receiving the notes, and along with the notes receiving, if there are any expenses, that expenses also have to be increased, and therefore the cash will not increase that much. Meanwhile notes receivable will be credited and interest revenue will also be credited because it's some interest you have received from the bank. Now meanwhile if you go down, there is an error in the book. Okay, so what I'm saying is this error, if you see here, the company error, it may be plus or minus. So here this is just a sample where the error is made in such a way that cash was underreported. So that's why cash is debited and whatever the other account payable is credited. But in case if the error was in such a way that you received more cash but actual cash issued was less, in that case the cash will be in the credit side and other account whatever is, that will be in the debit side. So that is about this entry. Now the next one more is less NSF check. So already less, it is clearly giving a signal that whenever you are making a journal entry for NSF check, the cash will be on the credit side. That means cash will reduce. Okay. Meanwhile accounts receivable, because check you are supposed to receive, right? So accounts receivable has to be debited and cash has to be credited. So this is the adjusting journal entry in case if it is a NSF check. And finally, if there are any service charges, simply put the charges under the debit of your miscellaneous expenses, and then cash has to be credited by that particular expenses, just like paying utility bill or paying rent or paying any expenses. Okay, so same way paying electricity bill, like that. So expenses will increase and then cash will adjust. Okay, cash will be credited. So these are the four different models of adjustment entries for whatever adjustments are there. So these are the only adjustment. This diagram is very important. So these are the only adjustments for this. These are the four different entries. Okay. Now I will demonstrate it. Okay, so if you look at this particular problem, what it is saying here: prepare the adjusting journal entries necessary to determine the adjusted cash balance for books. Okay. So what is the format of journal entries? So let me write here. First we start with the company name. Okay, so what is the company name? Sally Rice. Okay, so they are not given the company name, so I will simply say Sally Rice. And what is the date? So date is January 31. Which year they have not mentioned. Okay, and then now what are the adjusting entries? Okay, so here I will say adjusting entries for cash reconciliation. Okay. So you know the format of journal entries. Okay, date, and it will have account, and it will have debit and credit. So again, if you refer to my playlist on accounting cycle, you will find this detailed explanation on how to do the journal entries. So here this part we don't worry, because this is the bank's headache, so we don't care about that. Now coming to company, so the first one anyway is opening balance. So here less NSF check. Okay, so there is an NSF check of 450. So what you do, you go back to the template, look at the NSF check. Accounts receivable will be debit, cash will be credit. Okay, so that is our this thing. So Jan 31. So accounts receivable will be debited by 450 and cash will be credited by 450. So this is the journal entry for this thing. So this is adjustment for NSF check, not sufficient fund, bounced check. Okay. So now let's look at one more entry, that is bank service charges, $28. Okay, so this bank service charges, nothing but if you see here, what is again the template? See, bank service charges. So miscellaneous expense debit and cash will be credit. Okay, so that's what I will do here again. Jan 31. Miscellaneous expenses, that is $28, and then cash will credit by $28, and then this will be adjustment for bank services, bank charges. So now any other adjustment? There is no other adjustment. So therefore these are the two journal entries for this one. So finally this is the answer for your third part, that is prepare the adjusting entries necessary to determine the adjusted cash balance. Now how do you adjust, how do you find the cash balance? Simply you make a T account. Okay, so I'll just demo that. So the T account of the cash will be like this. Okay, so on Jan 31, what was the opening balance? Here you see 3975.2. 3975.2 is the opening balance. Okay, and again on Jan 31, there is a credit entry of 450 and one more credit entry of 28 for the cash account. Okay, so 450 and 28. So this is the T account. So what is the balance? So 3975.2 minus 450 minus 28. So that's exactly what we have done here. So you will getting $3497.20. Okay, so this will be your closing balance of the cash account. So this is how we use this journal entries of adjusting. Okay, So I hope you learned something from this particular problem. So let us try to solve more problems on this in the coming videos. If you like this video, please press the like button and subscribe to my channel, and refer this to your friends. Thank you.